So if you are investing in stocks, you are faced with stock market risk. And in this video is one of the most important videos you can watch when it comes to risk and return for the long term. Because many investors have little experience with risk, and there is no investor who wants to lose their wealth. Ideally, you want a high return without risk, right? Therefore, the following. Because in this video, we delve deeper into the risk that is associated with stocks and why this risk decreases as your investment horizon lengthens. Because what is the risk when investing in stocks? So here you see a chart of the MSCI World from the 1970s to 2024. A bear market is a downward market. You can easily remember this because a bear has large claws and can strike down hard. And the bear metaphorically strikes a trend line downwards. What do you see exactly in this chart? You see that the longest bear market over a period of 54 years lasted a maximum of 31 months and achieved a negative return of minus 51%. The heaviest three bear markets in recent years lasted on average of 22 months with a negative return between minus 46 and minus 59. And this is therefore a relevant risk that you take with investing in stocks. But although at first glance this seems quite significant negative return, in this video I will explain how you can put this into perspective. Because you want to understand all the figures first before you can form an informed opinion. So this is an extra important step that you understand how to align your financial plan to your wealth and you know which risk you can take to achieve your end goal. Alright, let's move on to the bull market. You can easily remember the bull market by the horns of a bull, which pushes the trend line and the market upwards with its horns. This chart you see MSCI World over the same period. So what first stands out is that the returns in the positive are many times higher than in the bear market. The average number of months over the past 54 years was also significantly longer. You see that the longest bull market over a period of 54 years lasted a maximum of 94 months and achieved a positive return of 170%. The heaviest three bull markets in recent years lasted on average of 81 months with a positive return between 109 and 170%. What also stands out is that after every bear market, a downward market with a negative return of minus 20 or more, there's always a bull market following. Returns are based on price index only and do not include dividends. And this is important. The price returns refers to the total return generated by an investment solely from the change in the price of the asset over a given period of time. It does not take into account any income generated by the investment itself, such as dividends or interest payments. And of course, past performance is not a reliable indicator and investor behavior will change from time to time. But the most important factor is that you earn the most when you stay into the market instead of trying to time the market. If you invest for the long term, you will have significant returns and your risk will diminish over time. You see, here's the MSCI World from 1979 till 2023. You would agree with me that we are talking about a period of 44 years. And what you see next is that over this 44-year period, 12 years of that 44 period has a negative return. But over 32 years, it is a positive return. Even though there were some years when the stock market wasn't doing well, most of the time your investment will make money. Out of 44 years, in 32 of them, your investments made a positive return. So about 72% of the time, your returns were positive. And on average, each year you earned about 7.6% or more on your investments. That's not bad, right? But don't forget the impact of compounding effect. If you invest 10,000 euros in the beginning of 1980s, your investment will be worth almost 850,000 euros. So that's the reason why you should stay invested and maybe think serious about your asset allocation. So be smart and you will make passive income for a long time. So when you have any questions, please let me know in the comments below and see you in the next video.